Hey everyone, hopefully you're having an okay day. I know the market went down quite a bit today. Um, I want to talk about some of the conditions. I want to show you some of these things that I'm seeing. And my opinion is that this is going to be a short-term pullback. I don't think this is going to be some blowout crash, but the market is very highly leveraged. When selling starts to happen, margin calls come and more selling happens. And I know that the commodity complex is getting hit pretty hard. I took a glimpse at the portfolio, and I shouldn't have done that. But the 10-year, people are running to bonds, they're running to cash, they're scared. And I'm sure some of you guys feel that too. You see your account go down, and you get scared. And I just look at it like, well, I mean, I've seen this before, and if anything, you should be thinking about when you would like to purchase next. Remember, there's a lot of momentum here. So momentum needs to get worked off. People need to cool down. And I don't think it's going to be, this may take a couple of months or something to kind of iron itself out. So I'm going to go over some charts. I'll give you my opinions. And again, this is just my opinion. I'm holding through it, and I'm hoping I can make more money and obviously deploy it when we have good opportunities. And as an investor, if you look at this from an investment viewpoint, you want things to go down so you can acquire more assets cheaper. So as long as you stick to a strategy, a plan, we know the ratios are cheap. We know that real estate, at least in terms of housing starts, is still in an expansion phase. And everything's looking good. Inventory's low on real estate. And maybe the markets, we're just going to have this big pullback. The Fed came out and said that, they're worried about inflation rates and they could potentially hike interest rates in 2023. And I'll show you some data here, some of those long-term charts to show you what's going on. Let's jump in. This is the US Treasury yield 10-year. We did break the uptrend. We broke it to the downside. We were coming back up, and we've got this massive increase in yield and then a decrease in yield today. So people are running to safety today. They're running to the 10-year Treasury bond. That's why the yield is going lower today. There's a lot of people buying it. They're also running to the dollar. It's up 0.9%. That's a pretty strong day. And commodities don't like either of those two things. They don't like people running to the dollar and having the dollar strengthen. They also don't like the 10-year Treasury. People all running into that. It's a combination of both. Dollar being the greater of the two. Here's the dollar on a long-term perspective. We've got this uptrend. This is the bigger line here. It is, last ditch effort to bring this thing up. It could come up a little bit. We'll see. I don't know this short-term stuff, and I don't worry as much about the short-term. But looking at this, we do have the 50-day in the blue line here, crossing the 200-day to the downside, which is called the death cross. We do have, this is a higher high, and then we've got a lower high. And it's starting to come down, and I think this is a shoulder that's developing. And it's going to take some time to work its way out and come all the way back down. It's going to take time. Here's the Dow to gold ratio. I just connected all these lows in here, and we broke that to the downside, and then we were coming back down. This is like the last ditch effort to bring this thing higher, I think, by lowering rates and by pumping money into the system and all of those things. And you could say that this is a shoulder ahead and then a shoulder developing and with an eventual move all the way back down. So I am being ultra patient here. I think gold's going to outperform the Dow. The conditions are in place that I've been talking about, which is real estate expansion phase. And we are seeing inflation. The Federal Reserve sees inflation. It's showing up in the CPI numbers. And this is a scared, could be a bear trap. It could be. This looks like a bear trap to me, this last come up there. Because we broke the trend. It comes on down, it pulls back up. Everybody thinks that the Dow is going to outperform, sucks everybody in, and then we'll see a hammer at some point. But in the short term, I can't tell you when and how that looks. Now, this is the Wilshire 5,000 to GDP ratio. This is the one that Buffett uses. It's never been this expensive. Stocks are incredibly overvalued in relationship to the GDP. This is the value of public and private equities to GDP ratio. Again, it's never been this high. We are in a massive bubble. S&P 500 to GDP, again, bubble. Stocks to real estate ratio. Stocks are in a massive bubble against real estate. Home prices are not as expensive as what most people think, especially not compared to stocks. Stocks are expensive compared to everything. Actually, let me. I'm just going to do one thing here. See if I can tie something together here. Oh, we are like right there. So here's the chart. I mean, I think this can turn any second now for the S&P 500. I think home prices are going to go up and S&P 500 is going to go down. Now here's the copper to gold ratio on a very long-term perspective chart. We went vertical here, and if you've been on the channel for a little while, you know what happens after breaking big, large chart patterns. What happens? We break them, and then we pull back and do kind of a retest. I always say this on the channel when looking at charts. They come up, they pull back, and then we'll head higher. They almost all the time do that. So why would this time be any different than what we've seen in the past? I think we are going to head a little bit lower here, have a pullback in the copper to gold ratio and in copper in general. And then we'll move higher after it. When's this bottom going to occur? I would be patient. And I'll talk more about that after all these. This is the M2 money supply growth versus inflation. Inflation is kicking up. It is delayed by a year or two. And we've got this massive move that came up. I have a feeling that inflation is going to follow this M2 money supply growth. Now, this came down, but that doesn't mean you go negative. It means that this is slowing the rate that they're printing money. So they're printing it way above 10%, 18%. And usually it's a little bit below. So we might see 10, 12% inflation or more. And it could be sustained for a while if they continue to print money at the pace that they're printing. Velocity of M2, it is flat. It's a little bit flat. This is a funky chart because people are going to say the velocity has been declining. Well, they've been increasing how much money they've been printing too. So I think that the velocity should decline here. And if this stays flat with as much money as they're creating, that's going to be massively inflationary. Now here's the real interest rate. This is the last chart I have. The real interest rate's in the blue. The red is inflation, and the black, I can't remember what the black line is, but real rates are diving down. This is when gold supposedly does its best, is when rates go down, like the mid 70s back here. Gold took off, it came back up. That's when it had that pullback, and then it took off again all the way to 1980. We're diving down. This is interest rates, the black line. Interest rates, nominal interest rates, inflation, and then the real interest rate. So we are diving negative. This is the conditions where gold takes off. And today, everything's being sold. Everything, at least in the commodity complex. And if you're an investor, you're going to have to live through this stuff. You just kind of look at it and you say, well, I mean, my account's down, but what are you going to do? If the conditions are ripe for a commodity boom, you're seeing inflation in the system, it's validated by the CPI number, which is highly manipulated. And we're seeing that we're in an expansion phase of real estate. To me, it's all game. It's all game on. Now, would I be jumping in with this much momentum going to the downside? I would wait. Wait until this momentum dissipates. I've got a little bit of money sitting there. I'm going to wait. And hopefully we come down a little bit and it takes some time down here because we can accumulate shares cheaper. And I know you guys are afraid. I've been a new investor. You guys are seeing the accounts go down. You're thinking, should I sell? Should I sell all this? What should I do? The first thing you should do is not panic. And another thing to keep, in the forefront of your mind is we are wired to feel this fear differently than things going up. We get more afraid when things pull back, and that's completely normal. I've just beat it out of me. I'm like a robot. I don't feel this anymore. I see the down number in the account, but it doesn't. I'm just like, well, what am I going to do? Then, you could sell out and not partake in what I think could be one of the biggest commodity bull markets that we've ever seen. Or you stick with the strategy, you stick with the portfolio allocation, you stick with a plan and execute the plan. This is all short-term noise. All of the indicators, even the real interest rate, all the indicators are there. So I'm sticking with it. That's what I'm doing. I'm not selling out. I'm not moving anywhere. I'm sticking in my companies. And now I'm starting to develop, if I've got some money, where do I deploy it? And when should I start to deploy it? Because I'm going to watch some of these companies. And when we come down real hard like this, if it's going to be kind of a quick bottom, what you're looking for are those large wicks on the bottom. You want to see a big reversal day. Now, if this day ends it comes on down and ends strongly with a lot of momentum and ends very close to its bottom, we could see another sell-off tomorrow even. Depends how big this candlestick is, and I'll go over it later today on some of these, companies and indexes and stuff, and uranium and gold. I'll go over all this stuff, guys. But I wanted to create this video. So I had the day off, so I was like, oh, great, I can create a video. And I saw the markets. I was like, oh, my goodness. I'm not too worried. And focus on what matters. Ratios, real estate, look at the dollar, look at all those things. Some of these have broke down. I think we are going to have a pullback. It's unavoidable at this point. And I think the copper price is going to come back down. Remember, we broke out and then it back retests. It could go all the way back to where it came back, broke out of that pattern. This guy right here behind me, it could go all the way back to that. All the way back over here. Or we come back a little bit and then we can head back higher. So it's going to take some time. Be patient, work hard, save up. And I'm going to be cost averaging in when momentum dissipates and it starts to flatten out and turn back up. That's my plan. You guys can use that plan. It's up to you. If you're scared and you think that you're too overexposed, do what you need to do to sleep well at night. That's what I would do. All right, guys. Hopefully this helped you. Give me a thumbs up. Thanks for listening. This is Finding Value.